Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. Let's start out with supply, 7,689 things. That keeps going higher. Show me that chart.
Yeah, it's another tick up of about almost 2% on the week. And, this is par for the course in terms of what we would expect seasonally for supply here, Noah. It's somewhat underwhelming for a busy season, but we are doing what we expect to be doing, basically.
Yeah, this is the time where we start to see whether or not there's not a seasonal element to it and there's something macro going on with supply. And, if this market were to shift again, which it very well might be doing right now, we will discuss that momentarily. You probably will see supply pressured to the upside, but we're nowhere near our record levels. So there's not much to talk about yet. We'll keep an eye on it.
Right.
Let's shift over to demand, Johnny. Pending sales, 2,761. Looks like it keeps going lower. Show me that chart.
Yeah, it's another 2% down on the week, and we are still in that reset mode as we approach those lines from 2020, 2019. We may see some support there, but again, Noah, entering into this busy season, which is not terribly busy yet, it remains to be seen where pending sales will end up.
Yeah, I think pending sales is going to overshoot to the downside, and I don't think pending sales has found its bottom yet. I think it's still searching for that bottom, Johnny, and it could keep going for another month or two until it finds its way. And you know what? As a result, this market pulse is now in buyer's market territory. So if you have buyers that were waiting for a leverage shift only 6-7 months ago when we were at peak markets, it happened, and it happened quick. Johnny, let's go over to the weekly, see if there's any clues there. I'm looking at supply. 350 things came on. That's down about 15%. Show me that chart.
Yeah, and this is exactly what you would expect on a weekly level from supply here. We saw that peak right after Labor Day, and we're seeing those successively narrower, I suppose, smaller weeks. And here we are. It's another lower week. But, if you look at where we were 21, 2020, 2019, essentially we're right in the same place. So it's been a lackluster supply season so far. We saw that in the overall chart, and here we're seeing it in the weekly as well.
Yeah, it's seasonal, right? It's just kind of where it's supposed to be. And like you said, you have that big wave come in during September, and then you get the ripples, smaller waves coming in thereafter. And that's what you're seeing. And that's probably going to just keep going down until the listing season ends. Let's shift over to contract sign, Johnny. 145. That's down another 9%. And that is not a good number, Johnny. That is supposed to be rising. Show me that chart.
Yeah, and if we looked at the weekly supply, now we're looking at weekly contract sign, and everything has been somewhat on par. We've been back to seasonal levels, and this is the first time, we've seen somewhat of a significant deviation away from where those seasonal levels are here. I mean, we're down roughly 15-ish% from where we were last year. So 2019, and that had been kind of the marker. We kind of been judging ourselves on how we were looking versus 2019, and we, for the most part of the year, been above it on the weekly level. Now we're below it, and below it by a good number. So it's not shaping up to be the busiest of busy seasons yet.
Yeah, and you know what? I mean, look, this 1 month contract signed is supposed to end the month at 950. I keep saying this because I want people to know where are we supposed to be? What level are we supposed to get to? And it's supposed to get to 950. And the fact that we're running a weekly pace of less than 150 is telling me that this does not have the oomph, the strength to finish out October the way we want it to. So the pressure on this number doesn't seem to be that much higher. And it's probably going to linger in the 600s, which is a significant slowdown from where we're supposed to be. And if that does play out that way, Johnny, you have to ask yourself, are we having another little shift down right now? All right. These shift downs, it happens when you have these moments of liquidity and it shifts the other way around. So when the liquidity dries up, you got sellers out there that are trying to move property and they can't. There's no bid, and they're going to have to do a little something, go down in price to get that deal moved. And that's kind of what the wave down is. It's looking more and more, as I see this data, Johnny, that the cycle, the price action down cycle that we're in right now is going to be one of those 2 to 5% here, 2 to 5% here, 2 to 5% here from quarter to quarter to quarter. And right now it looks like it'll continue till Q1, Johnny. And if we break down, if we break down some of the recent sales and we're looking at the top and the bottom, I'm looking at, all right, well, what is the trend of sales? This will be the blue line, where sellers actually were able to get a listing discount of 2% or less. Right. That's the blue line. Okay. Which way is that going? Well, what about how many of the sales, what's the percentage of sales that are closing that sellers had to go over a 10% discount to get a deal? And what is that trend? That's the red line. So you got the blue line showing you the trend of sales right near the ask, and that is going down. Okay. You got the red line that's showing you the percentage of sellers relative to where we were, right? That are now going over 10% to get a deal. That is going up. And this spread between these two elements for the first time, right, since about early 21, when it's been just recovery, super crazy mode, is now starting to close that gap, Johnny.
Yeah, and I mean, this is going back to July, and this is by contract signed month. So even though back then we were still seeing a significant more amount of sales that were getting at or below 2% listing discount, right? I mean, they're basically selling at the ask. That number is likely closing, and the number of sellers who are having to adjust their price at a more serious level is starting to rise. But the curve here, Noah, I mean, if you look, it's the sharp curve down in the blue line, right? So that tells me that buyers kind of step back, but that slower curve up on the red line tells me that sellers haven't quite panicked yet. So we're seeing a little bit more, but there's no panic there yet on the sell side. So that's my takeaway here. Granted, this is from July, so we got to wait, we have to wait a little bit longer to see August data. Most likely those curves are going to, close that gap a little bit more. But that is the market in a nutshell right there.
Yeah, and you could see, Johnny, what the normal market usually is. Usually that red line is actually a little higher than the blue line kind of a thing. And during this recovery, they switched the roles. They switched the roles during the recovery. So I'm wondering if this is now going to regress back down and do another one of these crosses here, which will take us back. And it's just another confirmation that we are in a risk-off sentiment and we are in a down cycle. And this is okay. We have had an up cycle for 19 months. We all knew it wasn't going to last. Now we start to turn to the depth and duration of this down cycle, Johnny, and we are going to be all over that question and those answers. Johnny, thank you for pulling up all this data. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, you guys got questions. We got answers. Please visit our forum right here. If you haven't checked out the Ari Harkov podcast right over here, please check that out. If you want any of the reports that John has whipped up today, it's going to be right over here in just a few seconds. Other than that, this has been your Manhattan Weekly Market Update, and we'll catch you next time.